Good afternoon. My name is David Schulin here at Chaikin Analytics, and I'd like to welcome you to 5 simple steps to find winning stocks in 15 minutes a day. Our presenter today is Sandy Chaikin, co-founder of Chaikin Analytics. Be sure to submit your questions through the webinar using the Zoom Q&A window, which you can access in the upper left-hand corner of your screen. I will be available to respond to your questions. This webinar is being recorded and a replay will be sent to all registrants. Sandy Chaikin's 5-step workbook can be downloaded via the link posted in the Zoom chat window. Keep in mind that Chaikin Analytics is not registered as a broker-dealer or investment advisor, either with the U.S. Securities and Exchange Commission or with any state securities regulatory authority. Chaikin Analytics is for educational purposes only and is not a trade advisory service. Past results of any trading system or methodology do not guarantee future results. Users bear sole responsibility for their own investment research and decisions. Now, Sandy Chaikin is co-founder of Chaikin Analytics, a groundbreaking stock research and analysis platform. With no prior experience, Sandy started investing in 2012 with Chaikin Analytics and built a killer portfolio that continues to outperform the S&P 500 and most money managers. Sandy is living proof that you don't have to be a financial expert to pick winning stocks. Thousands of investors attend her industry events and weekly webinars on fearless investing by following the Chaikin method. NASDAQ.com, Daily Worth, and Elevate all feature Sandy's investing articles and analysis. To get us started, here's Sandy Chaikin.
David, thank you so much. And thank you to the Chaikin community and to Hema Reddy's community for attending today's session. So as David said, today's going to be all about how to follow a very simple, methodical methodology of 5 simple steps. And I think today more than ever, it's really important to have a disciplined approach to your investing or trading. We've seen so recently such, whipsaw daily gyrations with panic and sell-offs because of a Trump tweet or a new tariff he's put on to China. And it's really made it there's a lot of noise. And what I want you to think about during this presentation is how to tune out that noise, because it's really important to your end results to follow a methodology that you can trust and tune out the noise, because that will really whipsaw you around. So let's get started with that. A little bit of an overview, but for those of you in Hema's following, this methodology at Chaikin Analytics does complement her momentum and relative strength indicators. So you can use our system in tandem with Hema's to kind of justify or endorse, her methodologies as well. We also have buy-sell rules, which again complement Hema's as well. So just a little bit of an overview. Before you trade a stock, or whether it's a day trade or longer term investor, you need to know where that stock is headed. And that's what Chaikin does well. So that's what we're going to be primarily focusing on today. Okay, so the problem has been that the S&P has grown an average of almost 10% over the past 20 years, but individual investors like us have only averaged 2.5%. And that's because people buy on emotion, not fact. That's my kind of cautionary tale about not listening to the news and all of the opinions and panics. You want to invest based on fact, not emotion. And it's expensive if you do invest on your emotions. The research shows that investors typically lose 4% a year when they run for the exit whenever the market drops. I mean, again, it did that this morning, right? The market was down because there was a new tariff, and panics, out, sell, and there goes some potential profits that you're just losing out the window. I'm a big follower, as you probably are, of Warren Buffett, singularly the most successful investor of our times. And what he says is investors should be fearful when others are greedy, and greedy only when others are fearful. So when others are fearful and selling, that's a good buying opportunity. They're lowering the price of a stock because they're dumping stock onto the market. If there's more on the market than there is demand for, the prices come down. And that, according to Warren Buffett, is when you want to be buying, and the reverse is true for selling. So keep that in mind too, because I do keep that close to my vest when I'm investing. All right, so today we are going to be looking at how I found stocks like these. These are all currently in my portfolio or have been in my portfolio. And as you can see, for the past full year's performance, the S&P is up about 15%. Yet these are stocks that go anywhere from double that to 118%. So wouldn't it be nice if you knew how to not only find these stocks, but know when to buy them and when to sell them to take your profit? And that's exactly what we're going to be doing today. That's my promise to you. I'm going to give you 5 steps to find winning stocks and to do it quickly, because after all, we're all time starved. We're in a time poor economy, if you will. So this is the type of stock I'm going to be showing you how to find. Centene is a classic example of what we call a classic bull. It's been up 61% over the past year. And we're going to break down these indicators below the price trend line and show you how to use them to evaluate a stock and identify a stock before it has this big run up so you can get in on the action. So why me? Well, I started investing, as David said, in 2012, and that was really after I had lost over 40% in my portfolio in 2009, when I had had my portfolio managed by a wealth manager for 3 or 4 years before 2009. And that was a tremendous blow to me, because I'd worked really hard at Elizabeth Arden and L'Oreal and the Franklin Mint to build up that 401k plan, turned it over to an advisor when I felt it was significant enough that it should have a professional guidance. I didn't feel confident that I could be making the right decisions. But after losing 40% and watching this go down and repeatedly asking the wealth manager, shouldn't we be selling? Shouldn't we be selling? And hearing the reply of, no, just, hold on, it'll all come back. That really taught me a very painful lesson. And that's part of why I'm here today sharing this with you, so that you don't experience that same kind of pain. I took control of the account after early in 2009 and put it into an S&P 500 account until I could figure out what to do. And that was about when Mark and I were getting together, and he could see that there were actually millions of people just like me who were totally disillusioned with Wall Street and had lost a lot of money and distrustful of putting it back in with traditional brokerage firms. And that's when we started Chaikin Analytics, and that was in 2009. So since I started investing with the Chaikin Power Gauge rating, which is the centerpiece of our platform, I've been in some really significantly strong stocks. Most recently, Boeing, CNC, Crocs, those ugly shoes, but the stock is doing really well. Before that, some small cap winners like Centa, Quad Graphics. Before that, Yahoo, Southwest Air, Skyworks. All this is to say that many of these stocks I'd never heard of before, but I don't need to know or hear of them to be confident when I'm buying them. As long as the setup looks great and the charts look great, that's my guideline. And what is this all for? I mean, we're all in the market to make money, right? I mean, I was brought up in an era where it wasn't considered polite for women to discuss money or cost in any way, shape, or form. So getting comfortable with not only talking about money, but having fun investing and making money is something I had to kind of get used to. But I'm very used to it now. I'm having a lot of fun, and the profits that I've made with my portfolio have taken Mark and I on some really terrific vacations. Most recently, we were in Italy in May and actually going back in October. So think about where you want to spend some of your profits. You obviously want to put some away into your 401k plan or your retirement plan, but I think it's really important to have some goals set of, rewards, benefits, and, give yourself a little present for doing well in the stock market and taking those gains. So I know we're all faced with challenges today, and I wanted to get a little read from you all as to what are the main challenges that you are feeling that hold you back, that make you pause before you hit that buy or sell button. And David's going to put up a little poll question for you to complete. Great. Okay, so I think the idea here is to just check off the ones that apply to you. It can be 1, it could be 5. I mean, whatever applies to you, just check it off. And we'll see what everyone's response is in a 30 seconds or so. David, are you seeing them coming in? Oh, yes, you are. Awesome. Thank you. Okay, so the big winner, as usual, is timing, when to get in and out. It looks like number 2 is information overload. We all can relate to that. Oh, fear. No, I'm sorry. Fear is second, followed by lack of confidence, uncertainty in the market, and fear. So thank you. Thank you all for replying. That's terrific. David, thank you for doing that little thing. Well, I've anticipated this because your replies are typically what I get every time I ask that question. So timing, we're going to be spending a lot of time on timing. How do you know when to buy and sell a stock? How do you know how to overcome the information overload problem that we're all flummoxed with 24/7 news channels and constant information being pushed to us? And how do you overcome that fear? How do you get the confidence to trade with confidence as opposed to fear and trading on emotion? So that's what the 5 steps today are all about. First, we're going to be talking about the tools, and let's go to that right now because I'm going to go through these one by one. These are also outlined in that workbook that David's put the link. If you haven't already downloaded it, he's put the link in the chat box. I urge you to go to that link and download it and take some notes in it. It'll be a good reference point for you to go back to when you're doing this on your own. So the examples today are going to be shown to you on the Chaikin Analytics platform, which is on desktop, which is the slides I'll be showing, but it's also available on the iPad, and that's all bundled into one subscription price. Okay, so tools you trust. The Chaikin Power Gauge rating is the bedrock of our platform. It's the centerpiece of everything that we do. And this is a model that Mark created in 2009. It took him about a year to create this model, but what it does is it gives you a very simple output. You can see here very bullish, and it goes down to very bearish, of the potential of a stock to out or underperform in the next 3 to 6 months. So think of it as a GPS for stocks. It tells you where that stock is headed. So as I said earlier, whether you're a day trader or a long-term investment investor, you need to know the direction of a stock before you take any action. And the Power Gauge rating has been proven reliable at identifying the potential of a stock to out or underperform. the market. So how did this come about? Well, as I said earlier, in 2009, after the whole meltdown, when I, as well as millions of other investors, were disillusioned with Wall Street, Mark said, I'm going to come out of retirement and create the same tools that he created for institutional investors when he had a 40-some-year career on Wall Street. He said, I'm going to take those same tools that I created for them, but I'm going to create them in a way that is simple enough for someone like you, Sandy, to understand and use. So that's exactly what he did. So you have basically a very complex algorithm under the surface, but you have this very clear output on the left here, very bullish. And you can see that it takes the information on the right, which I wouldn't never be able to make heads or tails of, and succinctly puts it into a rating from very bullish to very bearish. We say it cuts through the clutter, solves the information overload problem. Plenty of professional investors and institutions use it today, including Jim Cramer. I know a lot of you are fans of Jim's, and Mark and he are going to be doing another, they call it kind of a fireside chat, although it's not exactly a fireside in August, but in August 22nd. So you'll be getting a notice about that, but that was extremely popular in January when Mark gave it, and he'll be presenting with Jim again. So anyway, Jim does use the Chaikin Analytics model, and he says he's used it at his old hedge fund. So here's what it's made up of. There's basically 20 factors, 5 in each of these 4 components. You can get a power gauge rating, as you see on the left, for any of these 4 components, or if you want to drill down, you can drill down and get the 5 factors that make that up. They're all put into an algorithm with different ratings at 85% fundamental, 15% technical. And again, it gives you the outlook of a stock to out or underperform the market over the next 3 to 6 months. So the factors that I've outlined in red are the ones that I tend to drill down on. Other than that, I really look at the overall rating and am satisfied with that. During earnings season, which we're coming up to, or starting Friday, I think, I'll look at the ones in green. The earnings component obviously is helpful in guiding me whether to buy or sell a stock before earnings based on what the factors in this parameter and in this component say. So earnings are something that Jim Cramer would spend a lot of attention on. Financials are more of the value investors like Warren Buffett. Expert opinions, those are like our secret sauce. It's not easy to find what the short sellers are shorting, and they're considered the smartest people on Wall Street. So I want to know if they're shorting the stock, if they're betting on a stock going down, I don't want to be buying that stock for a longer term view. Likewise, insiders, who knows more about a company than someone who works there? So this measures insider buying. I mean, you're only going to buy a stock if you think it's going to go up. You may sell it for many reasons, but you're only going to buy it if you think it's going to rise. And that's why I have come to rely on these 2 factors in the expert component, as well as financials, price to sales, or free cash flow. I want the company to have some money. It's pretty hard to fudge free cash flow or price to sales. You might be able to fudge some other things on a ledger, but it is what it is when you're looking at these 2 financial factors. So those are just the way I look at the power gauge rating. This is a great quote, and this is really gives you the reasoning and the rationale behind why you should depend on a model as opposed to a human being. Models beat human forecasters because they reliably and consistently apply the same criteria time after time, as opposed to human beings who are swayed by emotions and opinions. So, I mean, even the guys on CNBC and Fox Business News, and, you know, as objective as they try to be, they are still human beings. They have feelings, they have opinions, and it's hard for them to be totally objective. I mean, it's pretty much impossible. So that's why it's so critical to look and incorporate a reliable model into your methodology. So why should you depend on the power gauge rating? Well, power gauge rating is used by institutional investors every day on Wall Street, in addition to us individual investors. NASDAQ asked us to create 3 indices based on the power gauge rating, which were launched in April of 2013. They overlaid the power gauge rating on 3 of their indices, the small cap, large cap, and dividend achiever indexes. And then that caught the attention several years later of Index IQ, which is New York Life's investment arm. They licensed those indices from NASDAQ. And in May, or rather April of this year, NASDAQ, Index IQ, and Chaikin were invited to ring the opening bell on Times Square. So you can see here, this is Times Square. I mean, this is Times Square with the Chaikin power gauge rating rotating around this huge display here in Times Square. So it's not just me saying, hey, this is a good model. It is being validated and used every day by the pros, and there's currently just shy of $1 billion invested in these ETFs that Index IQ has launched. So it's serious. It's a seriously reliable indicator. All right, so how do we use that? Well, let's go on to step 2. Again, I refer you to the workbook to go to the step 2 page. What to buy? So we have a criteria, basically, to identify a classic bull. And let's go into I'm gonna go through each of these 4 components of a classic bull. But first, I want to look at the actual way that a price moves. As we all know, the price of a stock goes up and down, right? I mean, when I was marketing, say, designer fragrances for L'Oreal, I mean, the price of an Armani fragrance was what it was, whether it was on the counter at Saks Fifth Avenue in January or in June. Obviously, that's not so with stocks. This was created 95 years ago by Dr. Wyckoff, who was teaching how to invest in the stock market. And since human behavior is human behavior, it doesn't change. I mean, what it was then is still what it is now. And this is the typical way a stock moves. So this can help you enormously with your timing. And the majority of you cited timing as your biggest challenge. This will really help you, because if you know that it's going to go sideways, if it's on an upward trend, it's going to pop up, but it also is going to pull back. And then it's going to pop up again and go sideways. If you anticipate this pattern, you'll know to wait when it's up here and buy it here on the pullback. And likewise, when you go to sell it, you'll know to sell it when it's up here, as opposed to when it's on a pullback. So learning to accustom your eyes to look for this pattern will be tremendously helpful to your timing. So let's look at a couple of examples. So this is a stock, SPS Commerce, which I just bought a couple of weeks ago. And this is, okay, so this is a typical chart from Chaikin Analytics. The bottom is the power gauge rating. So you can see for SPS Commercial, come mid-January, the power gauge turned green, turned bullish, and it has remained bullish ever since. That's a good thing. Remember, the strength is in power gauge, because this is 20 factors. So this is 20 factors telling you this stock is moving forward. This is one factor, and this is one factor. So that's just kind of the way to look at it, the power gauge rules. But it's also confirmed by relative strength. This second kind of heat map here, when it's green like this, it means the stock is outperforming the S&P 500. The S&P 500 is the benchmark against which most of us investors base ourselves. We compare our performance to the S&P 500 to know whether we're doing well or could do better. So if you're buying a stock, you obviously want it to be outperforming the S&P 500. Otherwise, you're better off just buying the S&P, the SPY, the index fund, and getting approximately 10% a year return, which isn't bad. It's a lot better than the 2.5% that investors get. But if you want to find those outsized returns, you know, those Crocs, for instance, up 118%, or Centene up, I think it was 71%. You know, this is the way to do it. Money flow. I'm going to come back to overbought, oversold, but let's look at money flow now. This kind of mountainous range here. This is the indicator that Mark created some 35 years ago in Wall Street, and this is really why he's known as a legend on Wall Street. This measures institutional money coming in and out of a stock. So when it's green, institutions are buying, and look what happens when everything else is equal and institutions are buying in a big way, the stock tends to go up. Supply and demand. It's the simple supply and demand. When money flow evens out, and it's perfectly natural for it to go for these ebbs and flows, but see, when it ebbs, the stock price tends to go sideways. When it kicks back in again, look what happens. The stock price goes up. And all along since January, you can see when the power gauge turned green, this stock has been going up. So when you say, like, well, gee, you know, how can I be sure the power gauge is pointing me in the right direction? All you have to do is look at some of the charts, and you can see for yourself that, yes, this stock is outperforming over the next 3 to 6 months, as it told us it would down here when the power gauge went green. I bought this stock over here at this little green triangle. I'm going to be pointing these out. These are buy signals, and we have correspondingly sell signals, which are red. And there's basically 6 different criteria that will trigger those. This happens to be an overbought, oversold indicator. This, again, now I'll explain this, is really helpful, again, for your timing. This measures that Wyckoff pattern, you know, that zigzag pattern. So when it's oversold, which means it's dipping down here, that's when you want to buy it. And I was helped by getting this signal here saying, hey, you know, this stock is now oversold. If you haven't noticed it, it's oversold. And that gave me the alert to buy this stock here a couple of weeks ago at 74. It's now at 76. This is pretty cool, these little Post-it notes over here. We recently added this, and what it's enabled me and our members to do is just to put our notes in here. I used to keep like a log book of notes like this, but boy, it's great putting it exactly on the screen. And this little yellow corner tab here tells me that I have a note on a particular stock. So when I open it, I can update it or whatever. But it's really been helpful. It allows me to remember why I did what I did. Okay, let's look at another example of a classic bull. Okay, this is Centene. Centene's power gauge rating has been pretty much solid green, with a few exceptions in February and March. But let's look at mid-April. Once everything turned green and stayed green since then you see the stock really accelerates. So you can see the power of having this type of a setup. This is the perfect setup for a stock that's going up. This overbought, oversold, again, will help you with timing. And back here, as my notes convey, in January 30th, I got an alert that's saying, hey, this stock is oversold. You see it dipping down here. This is a good time to buy this stock. So I bought it then, because at the time, everything else was green. This was green, power gauge was green, relative strength, and money. It all looked pretty good. I mean, it went to neutral But I gave it a little time, and 8 weeks later, it came back to positive. Money flow went, relative strength went positive. And then you can see what happens here in mid-April. Then the stock really takes off because money flow and institutions were buying the stock. I sold it up here to take a profit. Again, I kind of go by Warren Buffett's credo of, be greedy when others are fearful, and fearful when others are greedy. So when other people are buying, pushing the stock price up, it bumps up against this upper volatility band. These are Chaikin bands. They're not Bollinger bands, because we always get that question. But when they bump outside of that upper volatility band, they tend not to stay there for long. And it can be a signal to you to say, hey, take the profit. So I did take my profit up there. I made 12% profit. It did pull back, as you can see here. And now it's going back up again and is now bumping up against that upper volatility band at 131. So again, I don't try to be greedy and get every last nickel out of a trade. I'm happy with a 12% profit in a sketchy market, as we've had since January. And I can always get back into the stock if I want to at a lower price when I see this overbought, oversold pulling back again. It's back on my watch list. That's how I identify a classic bull. So I'm going to move on to step 3, how to find what to buy. Excuse me 1 minute. In the workbook, this is step 3 is identified as buying strong stocks and strong industry groups. I just reconfigured this today because I think this is clearer, because finding strong stocks in strong industry groups is one way to find great stocks, but there's other ways to find them as well. And I wanted to really put a higher emphasis on the ways you do that. So I've just reworded this to how to find what to buy. So we'll go through each of these 4 how-tos. Okay, so we'll start with, strong industry groups. The research shows that half of a price move is attributed to the industry group that it's in. There are 64 industry groups, and as you can see here, I've copied like the first 20 from our platform. We rank them in high-low sequence based on the preponderance of bullish rated power gauge stocks. So you can see up here, I've highlighted banks and thrifts. I think it's number 9 right now. But out of 64, it's in obviously one of the highest rankings. And the research shows that if you buy an average stock, say a neutral rated stock, in a strong industry group, you're likely to outperform even the strongest, say a bullish stock, in a weak industry group. So when you're looking to find stocks to buy, you want to be looking for stocks in the strongest industry groups. You got to put it, why not put everything in your favor? Give you the strongest possibility of succeeding and success. So you can go into our industries, as you see I've done here, but there's a much easier way to do that, because you can see here with banks and thrifts, there are 125 stocks. So if I said to myself, well, gee, I want to invest in banks and thrifts because they've been really strong lately, I'd have to go through 125 stocks. I mean, do you have time to do that? I don't. So we came up with a screener, which we added to the platform, which has saved me an enormous amount of time. What this allows us to do is to put in criteria, and then it'll screen for stocks that meet that criteria, and everything else would be filtered out. So you start with a universe of 5,000 stocks. If I put in under stock universe strongest industries, I'm only getting the top 20% industry groups. So I don't get the dregs at the bottom. So it's already filtering out only, so I only get the best industry groups. So that's cool. Then I put in the classic bull. And remember those criteria for a classic bull. Power gauge rating has to be bullish. And these three factors of the power gauge rating are what I like. And I want those all to be bullish as well. So now that's taken almost 1,300 stocks down to 58 with just putting those four criteria in. And then I jumped down here to oversold, because when I did this 2 weeks ago for the last webinar I gave, I wanted to buy, I had cash. I wanted to buy something now. I want that stock to be dipping down. I don't want to wait for a week or two to have to buy a stock. And then again, that classic bull pattern of a strong money flow and strong relative strength. And you can see I got down to 4 stocks. I then put in the criteria on market cap of small and mid cap, because the small and mid caps have been outperforming large caps, given that they're really not as affected by the tariff there I call it a war, the tariff war that's going on between Trump and China. So I went from a universe of 5,000, and literally in seconds, I got 4 candidates. So it's an incredible, efficient way to find exactly the stocks that meet the criteria that you've identified. So let's look at this from 2 weeks ago. I will just show you this one stock, Travelport, one of those 4. It's in the non-food retail wholesale. I don't need to see if that's a strong industry group, because it wouldn't have passed the screen if it weren't. So I already know that. It's actually number 13 industry group. But there's 43 stocks in that category. I'm not going to go through 43 stocks and look for the perfect pattern. This does it for me. So you can see back here where I have the yellow arrow and the buy signal, again, an oversold buy. It was pulling back, right? It was pulling back. All my other criteria was met. Otherwise, it wouldn't have been one of the 4 stocks that made it through the filter. And this was a great buying opportunity. I wish I'd bought it. But it was back in here at 18, and it's now almost 20. So I've made a note to myself to look at this when it's oversold. It's overbought right now. It's too high. I'm not going to buy it when it's up here. It's also bumping up against its upper volatility band, so I definitely don't want to buy it up there. I want to buy it on a pullback, and I want to buy it before they report on August 2nd, and you can see that's up here. Earnings reports. We're going into earnings seasons now, which is 4 times a year. Companies that trade stock are required by law to report earnings. These green EPS means that when they reported back in February and May, they beat analyst estimates. The price of a stock tends to move based on whether they beat or disappointed earnings. It doesn't seem to have anything to do with comparing it to the last quarter or last year. It's all about whether they beat the analyst estimates and whether they publish strong guidance going forward, which they're required to report. Does this company have a good outlook for the future, or are they scaling back their estimates for where they think the stock is going to go, or the future of the company is going to go? So that's all kind of wrapped up in these EPS, and you can see here the last 2 quarters, this stock has exceeded at analyst estimates, and is often the case it spikes up. And you can see it spikes up about, well, it went from like 17 to over 18, I guess. And then it pulls back. I mean, each of these little threads is a day. So looking at this pattern, I want to buy this stock before they report August 2nd. And because I'm expecting the same strong pattern. And during earnings season, I do drill down, as I explained when we were on the power gauge step 1, that during earnings season, I do look at that earnings component. And in looking at TVPT, their earnings component is very bullish. So everything's pointing towards a high probability of the stock beating analyst estimates on August 2nd and spiking up, in which case I would, and if I'm able to get in on a good price when it pulls back, I would sell it the day after they report earnings when it spikes up like that. Sell it when everybody else is being greedy and buying into the stock. That's when I want to sell and take my profit. That's typically what I do. So let's look at a screener that I just ran yesterday. Again, I took the same criteria as I did 2 weeks ago, and I got 5 stocks this time. I can put these into a list, and then I flip through. I can save the list, which I do, and then I flip through these 5 stocks. And those look interesting to me. I'll put on my watch list. I keep 2 lists, one of my stocks and one of my watch list. And I flip through the stocks in those 2 lists every day in the morning and every day in the evening. And that's basically my 15-minute a day regime. On my watch list, I'll only look at the stocks that are very bullish or possibly bullish, because if they've turned to neutral, why bother? There's stronger candidates to buy, right? So let's look at Southern National BANKCORP. Okay, so this is a bank, obviously a bank and thrift. And I think when I showed you the industry group breakdown, banks and thrifts was up there. I think it's number 9 in terms of priority. But there are 125 stocks in there. So Dan Russo, our chief market strategist, has been saying for weeks, the regional banks are really strong candidates. And so this is a regional bank, and the screener found this for me. I mean, I didn't even have to go look in the banks and thrifts, although I could have scrolled through 125 stocks. I didn't want to do that. I let the screener do it for me. So the screener is telling me that Southern National BANKCORP is oversold. And look, you can see it down here. It corresponds to this dip, right? Dip down here. Everything else is strong. So this is a great candidate as well to buy. It's a great stock idea. If you're keeping track of stock ideas, you know, this is a good one to put on your list. And consider buying it before they report on July 26th. Again, look at past earnings, okay? The last 2 periods they've reported, they've obviously exceeded. It's green, and the stock has gone up really nicely on the last one, and it went up really nicely here. I would have sold it up here because it extended that nice spike. It spiked up, it looked like, from like, what is that, 16 to 17 or so. I probably would have sold it up here when it hit this upper volatility. Oh, I'm sorry. No. Well, I may not have sold it up here because it didn't hit that upper volatility band. But I could have held it further and sold it up here. You know, I wouldn't have owned it in here. There's too much red. This is not a stock I'd be in back then. I would have only gotten into the stock as of May when everything turned green when they reported. So this stock wouldn't have been a candidate for me until after this April earnings report. But now it's a good candidate. Looking at the chart, everything is green, right? I mean, this looks like that classic bull setup, right? Are you starting to see this? You know, if you could just type into that Q&A chat box, yes, I'll get a sense whether this is making sense or not, if you're understanding this, because this is how you can really take advantage of the platform and find some great stocks. All right, I'm seeing, yeah, Mike says color code makes it easy. Yeah, it really does, and that's why we colored everything red and green. Carrie, Sherry, Siri, Doc. Yes, yes, yes. Siri says, how do you manage a bear market? Well, the indicators start turning red, and I'm going to cover bear stocks in step 5. So we will get to that. And yes, you can use it to buy puts. And I don't have time today to cover the options play overlay, but we do have an options component that comes with the subscription. Okay, great. Yeah, I see a lot of yeses. So that's great. Thank you for replying. Okay, so I am not the only person that's making money using the platform, the Chaikin platform. Another Sandy here wrote us in late January saying her 401k plan was up 47% last year. And remember, it was up, the S&P 500 was up 20% last year, which was an extraordinary year, but Sandra did even better at 47%. She couldn't have accomplished this without the help of the entire Chaikin team. Sandy's encouraging words, "You can do this, and here is how," were so empowering. My husband has confidence in my judgment. Thank you, Chaikin. I feel empowered. Life is good. I emphasize confidence because in order to make good decisions, you have to first have confidence in what you're doing, in the tools you're using, and the methodology you're using. Because if you don't have that confidence, you're not going to make a decision, most likely, or if you do, it's highly likely it's going to be a bad decision. So the confidence is really the key, and that's why I'm stressing these elements of the 5-step plan so that you'll be confident using this plan yourself and be able to make the same decisions with confidence and feel empowered. Okay, so how do I find these? Another way to find a stock. Okay, so far we've done industry groups and we've done screener, right? So another way to find a great stock is to read what Mark puts out on every Sunday. He has a market commentary. He always has a stock of the week, in addition to his commentary of where the market is and where he sees the market headed. You can see that's where I first read about Centene back in January. We also have daily stock picks. Our chief market strategist, Dan Russo, puts out a daily email to our members. And within that is a featured stock. That also gives you great ideas on the bearish side as well, for those of you who are interested in options trading. So that's another way to find great stock ideas. Another way is to use what we call a stock discovery engine. This is like a Pandora for stocks. So if you have Pandora or any type of music app, you can plug it with, say, Elton John or whatever, and they'll tell you artists like Elton John. This does the same thing. So I seeded the discovery engine with CNC. I said, show me stocks like CNC. And you can see these other fantastic medical stocks. And then you can click on them. This isn't live, so I can't do it here, but you click on them and you'll get the chart. And then those that look interesting to you, you put in your watch list. I mean, back in January, if you had done this, you also would have gotten Anthem, for instance. And Anthem is like way up right now. So is Humana. I mean, Humana was at around 260. It's now at 316. So all of these stocks have done really well, along with CNC in that whole category. So if CNC's done well, show me ones that have done well, that are similar. Here's your short candidates. So those of you looking for trading options, these are the opposites of being good. These are the bad stocks. They're likely to go down. So it gives you other options as well. But the point is, we try to make it as easy for you as possible to find great stocks to buy, as well as ones to short or trade options on if you're betting on a stock going down. You want to bet on a stock going down. All right, timing. Let's get into timing because I know that's your biggest concern. Excuse me 1 minute. I've been pointing out the buy signals along the way. And as I mentioned, we have corresponding red sell signals for each of these. So when certain criteria is met, a stock chart will trigger one of these signals. Another great way to help in timing, as I've been pointing out, is the overbought, oversold. This measures that zigzagging, that Wyckoff pattern, the ups and downs that a stock price moves in. So let's break this down into what to buy first, okay? How do you know when to buy? A big challenge for all of you, most of you, I should say. You want to buy a stock, ideally when you get an alert, although the alerts are simply alerts. They're not like, oh my God, you got to buy this right now or you're screwed. You can take this into account with other parameters going on with the stock. For instance, you want to make sure it's also oversold, even though you might get, say, a relative strength buy signal, and if the stock is overbought, if it's dipping up, zigzagging up, you might want to wait a few days or a week for it to pull back into this oversold condition. And you want to look for that classic bull pattern: strong power gauge rating, strong relative strength, strong money flow. How do you know when these signals have triggered? And as you can see from the examples I've used, I depend a lot on the signals. They really do alert me to a call of action. Hey, something has happened on one of the stocks that you're watching. You might want to consider buying it. This is my watch list alerts view from today. What we've enabled you to do is to overlay this alerts view on any list. So in other words, when I overlay the alerts view on my watch list, it will show me buy sell signals that have triggered on stocks in that list, as well as if a power gauge rating has changed, if an analyst has changed an estimate either up or down. These are all really important things I want to know about on stocks that I'm either watching or stocks that I'm buying, because that can prompt me to make a decision to either buy or sell a stock. And this is part of my 15-minute a day review. It's very simple. Just overlay the alerts view, and then you can see today I got 4 buy signals. Let's take a closer look at the one on Akamai. All right, so here's Akamai. You can see that the power gauge rating has really been pretty solidly bullish since last fall, with a little bit of ticking for a week or so into the neutral camp, but nothing to worry about. Relative strength has been strong. Money has been coming in. And you can see it's oversold, right? It's dipping down. It's below that 30 mark. The relative strength buy signal triggered today. They didn't know it was oversold, but I'm looking at the chart saying, oh, this is great. If I'm going to buy this stock, now's a great time because it is also oversold. They're also reporting July 31st. Look at the green EPS. The last 2 quarters have been strong. It's spiked up. Again, it pulls back, spiked up and pulls back. So I want to get into the stock, and I will get into the stock before the 31st, because I'm anticipating it's going to do the same thing, spike up, and then I would sell it. And what I often do after I sell it is I'll put it back on watch list and I'll buy it on a dip. So, I've done this so many times. I'll sell it like up here and then buy it back down here. I do that all the time. But that's how I would read this chart right now. So, David, if you want to I think we have one poll question on this one. Knowing that the stock is going to be reporting earnings at the end of the month on the 31st, what do you all think? Is this a stock you would like to buy before earnings? Or is it one, if you own it, you think you should sell it before earnings because you are afraid they might disappoint? So just take a minute, please, and put your answer in the little box. Okay, I think that gives them enough time. What's the verdict here?
About 78% say buy.
Good. That's great. That's the answer I would give too. It's all green. You're getting a buy signal. They've beat the last 2 quarterly estimates, and the pattern shows you that they spike up after doing so. So we'll see. We'll see what happens on the 31st. Okay, when to sell. There's two scenarios of when you want to sell, or when you do sell, rather. You're going to take a profit, or you're sensing that that stock is breaking down. So let's break this down into the two parts. So selling to take a profit. I do that on three different for three different reasons. It hits that upper volatility band, where I told you it goes outside of that band and is not likely to stay there. So it likely pulls back. So that's typically a high. It's overbought. It's zigzagging up, meaning it's zigzagging up. Or it spikes after a strong earnings report, as we've just seen with Akamai. Okay. Here's an example of a recent stock where I took a profit and sold it at the upper volatility band. So you can see from the notes field that I bought this stock really at its low. I put a limit order in during all that tremendous volatility in February, March, and put a really low limit order in, and it met that order April 6th at 84. Then things did turn neutral, but not bad enough that I thought I should sell it. So I held on. They reported it spiked up a little bit, but not that high, not up to the volatility band. So I waited for it to go outside that upper volatility band, which it did May 23rd. And then I sold it up here at 101, knowing that it's not likely to stay above that volatility band for long. So I took my 20% profit in 6 weeks. This is the ideal way you want to buy and sell a stock. I ignored this buy signal here. I already owned it, so I wasn't going to buy. I didn't buy more. And then you can see what's happened, since it's now at 92. I sold it at 101, so it's dropped 10% since I bought it. So that's why, I say I don't need to be greedy and get every last dime out of a stock. On this one, I happen to time everything perfectly, but that doesn't always happen. But, as long as you can take a nice profit, put that money into another stock that you're going to, anticipate will likely go up as well, that's great. You're turning over that money. This is another stock that I recently bought and sold. I bought it here, this yellow arrow, on a money flow buy signal back in April. It was on a recent screener, put it on my watch list. I got a money flow buy a week later, and I could also see that it was oversold, right? Oversold. Because it was on the screener, I knew it met all my criteria of a classic bull, as well as those three factors I like in the power gauge rating to be bullish: free cash flow, insider buying, and short interest. Everything lined up. So, and I got the signal, so I said, I'm in. And then I sold it again at the upper volatility band up here. This stock kind of went sideways, but it spiked up like 15% on a day when they announced that they had just been awarded this huge contract with Puerto Rico to basically redo their whole electrical transportation and distribution system that had been knocked out from Hurricane Maria. And they're also going to reconstruct the power grid. So it's a huge contract. I think it was, when I say it here, it was $900 million contract. The stock went up 15%. Again, I got out when others were coming in, and got out at a high up here, and made my profit. I made 12% profit in 2 weeks. You can see that the money flow had turned negative. So that would have been a little bit of a tell to me that things may not last forever. All the more reason to get out when it hits this upper volatility band. And then you can see recently it had like a 10% drop. Why would it do that? I mean, oil prices got higher that day. This was back in June 27th, and the shareholders must have been taking the profits because they got out. Look at the money flow coming out of it. And because there was more stock put on the market than there were buyers for, the price drops. And you can see how quickly a price can drop. In one day, it dropped 10%. That's why I like to take the profits when I can and not wait for the ultimate high. Although when you do, that's nice too. But I'm happy with a 12% profit in 2 weeks. All right, the other way to sell is when I sense a stock is breaking down. And on here, again, I have pretty clear-cut rules. And these are also in the workbook. Power gauge turning neutral, and another indicator like money flow, as I was just showing you with Mammoth Energy, turns negative. Certainly when you get a sell signal, that's a call to action. Price drops below the orange line, which is a 200-day moving average, or that lower volatility band. As I've been pointing out, the upper volatility band, they all have a lower volatility band too. So the classic example I have for this is from a year or so ago, but it's still the best example I have. So look, this is back in 2016, in the fall of 2016. This stock, Maiden Holdings, an insurance one, was in a strong industry group at the time. It was on a screener. I bought it here in December. There was a momentum buy signal in here, and that's why I bought it. Also was oversold. And look, strong money flow, strong relative strength, strong power gauge. Everything was looking great, right? Well, it didn't last that long. But a few months later, it did bump up to its upper volatility band. And the money flow had just ticked negative, just. So it was like a few days negative. And I thought, wow, I'm going to take my profit here. We didn't have the little notes field here, so I don't have them written on the on the stock chart itself. But I thought, I'm going to take the profit now and get out. So I sold it at almost 19 for a 17% profit. And boy, am I glad I did, because 2 days later, they pre-reported for some odd reason. The stock dropped 10%. And then when they reported again, even though it shows green, their guidance must have been poor, and they dropped another 10%. So, and then the stock started to break down. As you can see, power gauge went neutral, relative strength went negative, and money flow continued to ebb out of this stock. So this is not a stock I would want to hold now. It's now $7.85. I mean, keep in mind, I sold it at $18.72. So it's dropped almost 60% from when I sold it. So that's how quickly a stock can deteriorate. And that's why I say take your profit when you can. When it hits that upper volatility band, even with Centene, when it did go higher, you know, I just took my profit then. Not all trades are profitable. This was a lesson I had to learn when I started investing. I used to get really panicked if I lost some money on a trade, but losing money is inevitable. I mean, as Warren Buffett says, you just want to minimize your risk. So what we at Chaikin try to do is minimize your risk. You are going to lose money on some trades. It's impossible to have every trade be a winner. So this is a stock where I did take a 3% loss, and I'll show you why. So I bought it back here in December. Again, an oversold buy alert. Everything was green at the time. And then shortly after that, the money flow turned negative. And so I was starting to watch this, thinking I should have gotten out up here. Now, see, this was a lesson I didn't follow of my own rules. I should have gotten out up here when it hit that upper volatility band, right? I didn't. I thought, well, they're coming up on earnings. They had a strong earnings history. You can't see it here, but the earnings history was good. So I thought, well, I think they're going to beat and go higher. And I was wrong. They disappointed and dropped. So they dropped on the day that they reported, and that's when I sold it. I just sold it when they reported at 155. So I bought it at 160. I sold it at 155, but it's now 135. So it's now 13% below where I sold it. And as you can see here, it is breaking down. Neutral power gauge rating, negative relative strength, and look at the money coming out of here, and more, very recently, huge amount of money coming here. So this is not, well, I'm not going to say anything because we're going to put up a poll. We're going to put up the last poll question. So David, if you'll put up the last poll question, on reinsurance, they are reporting 726. You can see that up here. Do you think you should buy this stock before earnings or sell it? I mean, you could put a put option on it and bet that it's going to go down. Are you betting this stock's going to go up or down after they report earnings in a few weeks' time? I'll give you a few minutes to fill that in. And I'm going to go a few more minutes, probably 5 minutes more. But as David said in the beginning, this is being recorded. So if you have to jump, you will get the recording tomorrow.
All right. It looks like we have 92% saying to sell.
Oh, wow. You guys get it. So see, you can do this in 15 minutes a day. Thank you, David. And thank you, the 92 percenters. Those that were in the 8%, you don't want to buy this stock. They've disappointed the last several earnings season, and now they've got a lot of money coming out, and the relative strength to the SPY is underperforming, and the power gauge rating is neutral. So all signs point to this going down. You don't want to buy this as a long-term investor, but if you're trading put options, as one of your questions detailed you were, this is a good stock to bet on the way down. What do you think, David? I know you trade options.
Yeah, I do. Yeah, I mean, it looks very weak, right? When you talk about money flow and relative strength, absolutely. I think there might be a good opportunity here.
And if I were to overlay each of those 6 buy-sell signals, we could very well see some sell signals too that would say, hey, you know, this is likely to go down further. It's got a relative strength sell or whatever. Thanks, David.
Yeah.
Okay, so we have many happy subscribers and members. Norman says, through following your excellent system, his portfolio stands in excess of $1 million. Before Chaikin, I would make money and then lose it. Consistent earnings were just not a reality for me. And again, I stress consistent, as I did with the previous testimonials. It's so important to have a methodology so that you can have consistent earnings. Chaikin has changed all that. I can't thank you enough for your tremendous service and excellent methodologies. And this is a hats off to David, our webinar organizer today, as well, because he holds the hands of each of our members and checks in and shows them how to use the system, you know, answers all their questions, schedules one-on-one sessions with them if they need it, to outline how they can apply Chaikin to their specific methodology. So David, this is a lot because of you. Norm's made a lot of money, so kudos to you. Okay, bears. This is the last step. How do you avoid these types of pitfalls? Again, it's the reverse of a classic bull. And the Wyckoff chart is the reverse. I'm not going to take the time to go through the Wyckoff chart, but it zigzags mostly down when it goes across and then down and then across and then down instead of across and up. Let's go back to Warren Buffett again. Avoid risk whenever you can. That sounds pretty simple, doesn't it? Well, risk is holding a bearish rated power gauge stock like Starbucks. So this would be a classic bull, classic bear, sorry. It's been power gauge bearish most of the year, a couple of little ticks to neutral, but not everything turned green at once. So the relative strength turned better in April, and you can see that bumped the price up a little bit, but everything else stayed kind of neutral or negative. And then you can see here, they announced store closings June 20th, I put in the notes, and that registered that 10% drop on the day, and has even gone another 10% since that day, which was only a few weeks ago. So this is, again, a bearish stock. This is a stock to avoid. And these are sell signals, these red arrows here. So if you had owned this stock, you would have been getting warnings. And if you had been following the methodologies outlined in the workbook, you would have sold this, back way earlier last fall and not endured the pain. On the flip side, these sell signals I know are very helpful for options traders. And wouldn't that have been a nice put option to act on that sell signal and get that 10% drop and that subsequent 10% drop? So here's another classic bear, Philip Morris. Oh boy, look at my notes. I think that's when my cat must have stepped on the computer. So sorry about that. But how would you find a stock like this? Well, Dan Russo, our chief market strategist, puts out the daily email to our members, as I mentioned, and every day he has what he calls the stock of the day. And he alerted our readers on April 16th to Philip Morris saying, hey, this has an oversold sell on it. They're reporting earnings. You can bet that this stock is going to be dropping. And actually, David, if you don't mind piping in again, I think you traded this stock, didn't you, on Dan?
Full disclosure, I traded this stock many times from the end of 2017 through the last time Dan had mentioned it. I personally, using Chaikin Analytics, bought puts on multiple occasions, looking at it when it was at the upper volatility band and overbought. And with all the negative indicators there, bought a put and wrote it down to an oversold position and sold for a nice profit. And of course, when Dan mentioned it, boy, did he get it right. That he mentioned it maybe a week or so, I guess it was, before earnings. And that was maybe the best trade I've ever had. So worked great.
So yeah, this is totally unrehearsed. You all. I didn't alert David that I was going to be asking him about this, but I just remember from the talk in the office, there was great excitement because a lot of people took Dan's alert seriously and
we did.
money on the way down, right?
Yes, we did.
Okay, thanks, David. I appreciate it. And here's Dan Russo's call out back in April, a few days before they reported. Okay, so let's recap. 5 steps that we've walked through today. Tools, our tool of choice is the Chaikin Power Gauge rating. We identified a classic bull, so you know what to buy. And we identified how to find those strong stocks. Strong stocks and strong industry groups, you can find them via the industry group sort, screener, discovery engine, or take someone like Dan Russo's suggestions or Mark Chaikin's suggestions every week or every day. Timing, we review timing, when to buy and when to sell, and how to avoid those classic bears, or take advantage of their losses on the way down if you're an options trader. So I made a promise to you in the beginning that I would show you 5 steps to find winning stocks in 15 minutes a day. I hope I've delivered on my promise. And all of this is so that you can enjoy the fruits of your labor. You can make more money in the stock market and have more fun with the money you make. For us, the fun is trips, but whatever your fun equates to, reward yourself and have some fun with it. And it makes it, it puts a little bit of fun into the daily activity of watching your portfolio because there's a goal in mind. This is all done on Chaikin. Again, it's on desktop and iPad, bundled in one subscription. We've gotten numerous awards recently from Benziga, one this year and one last year, for best stock ideas, due primarily to that discovery engine, that Pandora for Stocks discovery engine. and also best in show. So we are recognized by our peers and are very proud of those awards. So the subscription retails for $2,195 a year. We're taking $300 off when you become a member by this Sunday evening at midnight. But if you'll stay with me, we're going to sweeten the pot and make it a little bit better. So what does that include? Well, it includes the power gauge rating, the 20-factor model, the stock discovery engine, as we've gone through, the screener. We did get to the screener. This is the options play overlay, which is a real, has added a lot of simplicity to trading options. So you don't have to do all these calculations for you. It basically does them for you and tells you which is the intended score or strategy, I should say. And I know Josh, who works with David, gives webinars every week, interactive webinars twice a week to our members on how to trade options and how to use the options overlay. So it's been a very productive tool for many of our members. Okay, in addition, there's a one-day view. We didn't really get into this, but if you're trading a stock on a particular day, it's really nice to know how that price is trending by the second. This tells you how. The earnings, I didn't drill down on it, but you can get more detailed information as to exactly what they did report. And this is an example of one of Mark's weekly commentaries that he puts out every Sunday night. But as I said, Dan also puts one out every day during the trading day. And I know we have a lot of followers of John Malden, and so he follows our system and uses our system. And he has a huge, I think he has several million followers. But he says his analysts are enthusiastic users of Chaikin and use it to analyze the trades and recommendations of our writing team, giving them feedback and insight into their own ideas. So Mark's system, i.e. Chaikin Analytics, has been integrated into our routine due diligence process for vetting and evaluating potential investments. And I know we have a lot of followers of Tom Gentile and John Carter, to name a few, that are on today as well. They all use Chaikin Analytics as well. One of the benefits, the huge benefits of using Chaikin is that we totally invest in education. So David and his team, he has two other colleagues that work with him, will offer small group tutorials to help you set up and use the features. So when you subscribe by tonight, for instance, you could be into one of these training sessions as early as tomorrow. And these are unlimited. You can go to as many as you want. We have member-only sessions. You can ask questions. They're interactive. And if you want more specific one-on-one training, all you do is request that, and a dedicated time slot, half-hour time slot, will be set up for you one-on-one, and those are unlimited as well. So we invest. I mean, our success is based on your success, is our motto. So we want you to be successful. So I said we'd sweeten the pot. We're taking another $100 off the annual subscription. When you subscribe by midnight tonight, it will lower the price to $1,795 a year. So I think that ends our session here. I thank you for staying longer with me. I thank you to HEMA's community and to HEMA herself for inviting you all to attend today's session. And David, I'll turn it back to you.
Thanks very much, Sandy. Really appreciate that. Everyone, as you can see, the typical price for Chaikin Analytics is not $18.95, is not $17.95, but that is what the offer is for you today. If you look in the chat window, you can take advantage of that offer by clicking on the link available right in there. $17.95 for an annual membership to Chaikin Analytics available to you right now. That does include the client success team available for you. It includes multiple members-only sessions, including tomorrow. There is an onboard session available for those of you that sign up right away, available at 2 p.m. Eastern. We do those multiple times per week. One-on-one sessions available as well with your client success team. We're always here by email and by phone as well. And if you call right now, you can you can get some associates that are standing by right now to speak with you as well. So again, $17.95 for an annual subscription, an annual membership, $400 off the normal price. We thank you so much for joining us today. Thank you so much to Sandy for telling us all a little bit about Chaikin Analytics. Again, my name is David Schulin. We hope to see you with us